within the equity market, hey, what's going on, guys? I just started the recording. Right now, we're going to be going over preparation here for the CPI report as well as FOMC next week, right? So we have two major binary events that can obviously result in a change of hands. Just as we talk about with, how there's obviously capitulation to the downside, there's always an event that happens from the downside that results in a change of hands. Just as we've talked about in the market where you have a top, the topping being a process, the bottoming being an event, just like we had over here, right? This was obviously a very nice steep correction within the NASDAQ and the S&P, and we filled some of these gaps. Obviously, the change of hands happening in an area that's not random at all, and then we have an event. We have a vol event where volatility is exploding. You have dealers caught off guards on a move like this on consecutive gap downs and capitulation, right? This is why I didn't have any sort of large positioning size here, position sizing, I'm sorry, leading into the CPI report, because we don't necessarily know what's going to happen. However, what we do know is whenever we go here, I'm going to put these on white so you can see a little better. When we go out to the bigger, larger perspective of everything going on here, this was kind of the area of a previous higher low, right? And that led to obviously expansion all the way to the upside, and then obviously a redistribution from that point, right? So a roll of Wyckoff would be once you start failing beneath this level, you would have to pull to any sort of imbalanced area of the chart, right? And we have already done that. We've just filled the gap today on the NASDAQ, and we closed ever so slightly above. Obviously, we have slight little gaps here at like 448.64, which is also tying in nicely with the March consolidation right around that March OPEX area, and after March OPEX into the rally higher, we had that really nice pivotal area within QQQ, right? So all the gaps are filled that are anything relevant, right? But at the end of the day, it all depends on what happens based off of all of this data, right? And it also really depends on what happens around that March OPEX territory, right? So if you guys go take a look at your March, your OPEX calendar, we have March OPEX, I believe March 21st. And those flows start getting stronger and stronger and stronger. You could get the Vanna squeeze to the upside, leading in about a week away from that March 21st window. Okay, and Vanna and Charm are their strongest. That's the flows within that options chain itself. They are their strongest whenever you're about 2 weeks away from that OPEX expiration, right? And obviously, we have an area in the market where we could obviously be putting in a higher low, right? You take your August 5th low to your current swing high, and you take a look at where we actually are with that within on the NASDAQ, and we're actually sitting right off of a higher time frame, 618 retracement here. Obviously, like I said, bottoming is an event, topping is a process, and the volume is getting very, very, very large leading into these binary events, right? So that's one thing that I really would like to talk about. And if we don't get a major change of hands candle and a major signal candle within the market, then obviously that window will extend a little bit more into FOMC, where we could start seeing obviously like maybe an emergency rate cut if we maybe keep capitulating, or we start to see just an overall reaccumulation building into that FOMC, and then obviously the FOMC is what catalyzes everything moving forward, right? So this is more just about CPI, and I want to talk about CPI. I want to talk about, obviously, I don't really want to get too much into a macroeconomic standpoint here because I don't have unlimited time here. I could talk about everything going on in the market, but at the end of the day, don't really want to talk about that. I would rather talk about further consideration of targets here for the downside in the NASDAQ. And if those obviously don't play out, then the further upside, and whether this is going to be a reversion trade or a trade all the way back to the new highs. First things first, obviously, if we don't get a gap up, right? Vol is going to obviously simmer down a little bit. Those options are going to decay, lose a lot of value, and we might open up just around this area, right? And from that point on, we would obviously go into smaller time frames, start looking at if price would like to stick to this gap, right? So this is the 471.44 gap. If you guys go over to the S&P 500, we're actually slightly beneath the gap fill over here, right? So basically, the line in the sand here for the S&P and the NASDAQ would be the NASDAQ above the gap, and above basically previous today's session high, and that would also put the S&P basically above this massive breakout level here on the daily chart at 565, right, which was my Q1 target actually, and now we're actually beneath that. So very, very important gap up or gap down, right? So first scenario to play out would be if we were to gap up, what I would be looking for is the gap up and obviously the retracement into the gap, or certain levels to obviously be reclaimed. If we go to the higher time frames here, guys, this is a major unfilled gap here to the upside at 491.79. I believe they have, I want to say, I can't remember how many in the billions, but if you guys go check your dark pools that have been coming in as of lately, they have a dumb amount of money that it was sitting up here at like 491.79, right? So this is a very, very important area on the chart, and this is just an area where obviously price would obviously draw to if we were to successfully get above this gap or gap up, find a retracement, and then obviously from that retracement find a higher low, and that would be the trade target to target trade here up into 491.79. Let me go check my prints actually on my phone and just see where everything is sitting from. But I believe we have almost a record amount of money that I've seen hitting the dark pool here at some area on the chart. I think it was all the way up at I think there was one that was 576 on the S&P, right? So we go over into the S&P and you guys can see how right around here is the gap fill, 576. Yeah, so that's the entirety of the gap fill. There's 65 prints there of sell orders on the ask that were lighting up the dark pool here. And that's just a fantastic area to think about your first target in mind here if we were to get a gap up, and then obviously retracement, a higher low. Look at the discounted higher low on an intraday scale here, and then obviously that would lead to probably reversion all the way back to the upside to that area minimum, right? And that's also a back test right here off of 575.35, which is a break of structure technically now on the S&P, right? So when you guys go to the weekly chart, it's higher low by higher low by higher low by higher low, right? Until we obviously started to get the distributive top from the upside. And then once we had that distributive top, this higher low right here around 575, 576, it actually cracked beneath. And now we would obviously be looking like we would get a major trap candle and obviously a continuation of that structure if we were to close this weekly candle above that spot, right? Because that would be a hold of the overall structure in the S&P, and that would obviously be a major trap candle. And this is also a NWOG, right? So data can obviously facilitate price to those sell orders, and then obviously those sell orders can be absorbed, and you could find a buyer obviously pushing on top of those sell orders absorbed that hit the exchange. You could fill some of the smaller minor gaps. There's one right here at 583, and then you could start using these areas on the chart as now potential higher lows, or just the previous areas of where there was previous breakout levels from, right? So I'm not saying that we can't get some sort of LPSY on a pop. This could be just simply put a reversion trade to the upside here, but all I'm really saying is we're getting in a window where the short side trade is becoming less and less vulnerable. We're in an area of undiscounted put premium. We're in an area of very expensive put premium. We're in an area where obviously the short side trade isn't really that great, right? And you never want to take chances on just shorting the whole, shorting the whole, shorting the whole whenever things are filling gaps, whenever things are pushing, like I said, into swing low, from swing low to swing high, into their golden pocket ranges, and on obviously having NWOGs to the upside that remain unfilled with data sets still pending, right? So I'm not saying the distribution can't continue. We're just simply looking at the data tomorrow, and we're just simply looking at the unfilled areas of the charts with obviously lacks with a major lack of a retest as well, right? And what I mean by that, guys, would be okay, yeah, we had an unfilled gap right here, right? So we could get rid of that because it all filled, and then obviously we have reversion potential here back to the upside, and that reversion obviously being off of right around this area, right? So right around here. Call it 576 if you would like. Obviously, that's where the dark pool orders remain resting from, and this is basically just a back test of the election gap, right? So it makes total sense in terms of us maybe potentially finding an LPSY here, and then obviously this can recorrect into summer maybe once more, and then push lower, find a change of hands maybe into FOMC if they want to distribute this thing and push it lower one more time into FOMC, and then maybe announce something absolutely crazy that's a major pivot for the Fed, and then obviously that would result in the vol event that we talk about in terms of topping is a process, which we have already kind of went through that process. Bottoming is an event, right? So yeah, absolutely fantastic structure playing out here within the S&P as well as within QQQ. Right now, I hold about half size on my target calls. If we go over into some of these other areas of the equity market, I've been sitting really tightly with everything going on in terms of just I haven't really had a full size crazy trade unless it was just an in and out scalp. I haven't really been overnighting much. I had a couple short side runners on further dated contracts throughout this last 2-day bloodbath, but it's been very much so further out expirations, and it's been runners on trades that I've already been trading through those distributions, through the LPSYs on distributions like we look at over here on TSM, and I've simply just been rolling profits on each and every little pop and scaling in incrementally contract by contract on $300-400 contracts. I don't need to put any more than $2,000 into a trade right now. Nothing's obviously guaranteed, and some of these charts have been fantastic for downside opportunities, but they're coming to an end, right? A lot of things are beneath and undercutting their 200 SMAs. Obviously, everything has been recorrecting as a whole within the overall market, right? We go take a look at sector by sector. Tech absolutely fell off a cliff. We go take a look at the Mag 7 ETF, which is your top tech stocks. You're getting record high volume. Technically down here at the bottom of this trend here, right into a CPI report, right? Obviously, there's been very important areas within these charts. As we look over here, we could see a major pivot on this chart right around here, which is now just a really nice back test on record high volume. So these are nowhere near any area of the charts that you really want to be talking about your downside being such a vulnerable trade, right? Obviously, if we fall a little bit further, I'll close out of the couple contracts I have as total positioning, and I'll just reevaluate a little bit lower and just see whenever that reversion trade sets up. Right now, we could go over into the equity market. We could talk about some of the things going on over there because there's been plenty of reversion trade examples here back to the upside as well in the overall equity market, right? So obviously, last week's lows on Google sit just right around here, right? And we had a lot of consolidation on Google that is now leading to potentially, a breakdown of this little tiny minor consolidation that kind of looks like a bear flag on the daily chart that got beneath this like gap progress range, right? And then it'll obviously gap down one more time with the overall market. But you're getting, like I said, just yet again, a lot of volume, a lot of previous lower volume consolidation, and now you're getting double wick daily candles that have a lot of volume taken out a previous higher low in the weekly, right? And you're pushing into ranges of previous massive consolidation where the areas of the chart are a little bit more liquid, right? So we go over into Tesla, right? I mean, this is a fantastic looking chart that has absurd amounts of volume, almost filling the entirety of the mega earnings gap here of plus 22%, right? This is the election gap, and it already filled that. We didn't see any sort of substantial amounts of volume. We could see that substantial amount of volume here as we lead into this new day with now a really nice undercut on the previous day low. This is actually why I took this trade today, and now almost looks to be of somewhat of like some sort of inside bar, right? Obviously within Tesla, it's the same general concept that we're talking about, just as we were with the NASDAQ and QQQ, right? These could be major weekly trap candles. As of right now, that is just pure speculation based off of what the CPI report does, and obviously that could be a delayed a delayed accumulation that's obviously building as we push into the FOMC window, right? So we don't want to be too certain about anything, but just as we talked about with the NASDAQ, right? We talk about this candle flipping here back to the upside. You take a look at this massive breakout level right before the actual earnings report here, or the election, whatever it was, and this could be a crazy trap candle in a lot of these names. This is actually why I have a little bit of exposure to the 2x bull leverage DTF on Tesla, as well as a contract. It was only like an $800 contract. It's not a big deal. I can let it go to zero, but yeah, just that on Tesla as well, right? And that would start looking like a massive change of hands happening in the overall tech equity market, right? That would just be an absolute huge trap here from the downside, right? We go take a look at some of these other names, and like I said, I mean, a lot of these other names, guys, they don't really look too bad here for the upside. Obviously, Meta's not something that I would really touch. I don't see any sort of true edge within a chart that looks like that. Apple's at lower extremes of what could be potentially a redistribution, and it has been respecting that LPSY that I talked about on the weekly chart that we previously had, and we never closed above that. So all this really did was really stir up a disgustingly large LPSY here throughout all of this consolidation. Sometimes you just have to look at the bigger picture of things and understand that, you know, this whole entire wick up here was an LPSY, and then they try to fake you out one more time. All they really did was obviously capture the orders off of this progress range that has been made from sellers, and they developed another redistribution that eventually closed this gap that was very minimal here from the top of the trend, right? And now we're looking really weak as we pour our ways lower, but still, I mean, these have been charts that have been breaking down absurdly hard, right? And we still have some upside gaps to fill here. We have one right here. I could actually get rid of this level, and we're now in support, right? So even for just mean reversion here back to the upside on a lot of the equity market, like I said, has just been a really, really clean look, and it's been looking very probable in my opinion here as we move forward, right? Very, very large trap candle potential as well in the Microsoft here. If this thing were to obviously flip green here on the week and get above this 385.58 level, that could also be a fantastic opportunity here for the upside to then go fill its gap from last week into this week. It's NWOG here at 393.31, right? So we could all just see the potential going on here, right? But what if it doesn't happen? Well, if it doesn't happen, we have a few rotations to think about. We would want to see what are the leaders, or if it were to be a bloodbath tomorrow, what are the names that held up relatively well in comparison to the rest of the market, right? So what are the names where you know, we talked about the consumer rotation happening throughout most of the tech distribution. We could obviously see how the markets are kind of pricing in the fact that maybe they don't want to really have a lot of consumers on hand, and they're trying to distribute these and mark these things a little bit lower, and then obviously revert tech back to the mean, and then maybe pick up XLP once again on a higher low at some point, or through the breakout area up here at all-time highs if they want to do that again. But this chart doesn't really show anything as of right now, other than it may be looking a little bit more distributive. We go over into names like XLE, and that's kind of been a little bit of a lagging sector. One thing that I will say, guys, is within XLE, what we have had is a record high amount of volume here leading into the March OPEX. And this has been the highest volume that we've seen in 2 years on the weekly chart, right? So that's very, very significant. Obviously, that's something that could stir up a very large move as long as these things can stick to these current levels, right? We could have potentially had ever so slightly a higher low at this point here on the chart. I don't really want to bet on that just yet, right? Like I said, this could obviously be a redistribution or a reaccumulation. This could be one massive reaccumulation from the previous rotation over here, and now it's finally waiting for that window of a risk-off market to play with here, and it could explode here all the way back up to 94 and eventually develop a path of least resistance and start shooting for all-time highs above 98, 99, right? So we don't know. We don't know, and this is a very pivotal window here for the market. March OPEX, FOMC, as well as the CPI report. And I believe PPI as well, as we also have, obviously, CPI. We always have to expect the least out of something. It could be a complete and total nothing burger, but the things that I'm actually looking for in terms of price, in terms of everything going on here from the perspective of like smaller time frames would be, we just filled our gap, right? So I would like to get above the gap, and this is technically where the NWOG sits, right? It goes from 483.50 about that to 491.80, right? So about 492, and if you guys go take a look at the S&P, it's just right about 576, right? And the S&P starts around 569.50, right? So what would I prefer to see here on the S&P would be some sort of mass capitulation into a red to green type of day. If I see mass capitulation leading into what looks to be a little bit deeper, I'm probably, if I see mass capitulation leading into the 618, and then I see a crazy amount of volume, and I see a crazy amount of vol being really, really juiced up, and we go take a look at VIX, and this thing just absolutely explodes through this resistance, I'm going to be preparing to position myself heavily on leveraged ETF commons, right? Like bull ETFs. Vol's going to be too high to obviously take options. We could wait for the vol to simmer and catch higher lows subsequently, but it's going to be way too high of a vol to really have a lot of exposure to options. I'm going to be in futures, leveraged ETFs, whatever I could get my hands on, and whatever I have enough time for in the morning session. If that were to happen, I'm not saying it's going to happen. So we go back over to the SPY and the QQQ, and if we do get a gap up, and that gap up starts to fizzle out a little bit and things start looking like an LPSY, what I think happens is I think we're going to get a very, very quick, fast redistribution into the FOMC, and then the Fed's going to pivot, and then that's going to be our vol event, and we might get a quick little geopolitical headline leading into FOMC, and I'm not kidding about that. I think that they want to push things a lot lower in preparation for QE, in preparation for adding liquidity here to the market, and really making a big pivot, right? So that would be kind of the schematic that I'm looking at. Obviously, this to be back tested, around the election gap to be back tested, which also, like I said, this is also kind of aligning directly with the election gap right around here where all of those dark pool asks are sitting. On the S&P, like I said, it's also the election gap as well. So that would be a perfect spot for an LPSY on the daily chart. We just have to simply wait and see, and then obviously that could result in a markup into just simply rewashing, and then obviously redistribution happens from that point, and then we mark our ways a little bit lower, maybe put in a higher low or go into a new lower low in a capitulation style. Lots of volume on that with not much price progression. Yeah, exactly. Yeah, there's not a lot of progression. So obviously a counter trend rally is a little bit more likely leading into an event like this, right? They're hammering things down, guys. They're hammering things down into an area where they can actually start QE, right? Because you can't start QE and you can't start what they've been mentioning with the S&P up here at 608. It's just not possible, right? So they would have to really pull things here to the downside and really shake some people out and really get prices cheaper. And then obviously from there is whenever you could either revert back to the upside and then really distribute and really speed up back to the downside. Or you could just simply see a change of hands from the event's candle, right? So now we go over into some of the individual tickers. Obviously, there has been a mass liquidation within U.S. markets, right? And we've seen how China has been on an absolutely insane run, right? So we go over and we take a look at the Chinese futures and we can see how this is just absurd, right? This weekly chart is just absolutely crazy. We actually just got a breakout within China right around here at 22,700 on the HSI futures. And this is a very saturated rally to the upside, right? We go take a look at like Queb, and that's been a decent little rally, but these have now just potentially broke over their creeks. There's still a lot of potential in names that look like this, right? I'm just saying if they want to further distribute the U.S. markets very, very heavily, right? Because this has also been a very clear rotation. We go over into BABA, and this is what I mean by saturated. This thing has been on an absolutely monstrous run, right? We go over to JD, really nice run, but not anything too crazy, right? This is not the run. This is your run over here. This chart is just terrible looking and very gappy, and just not anything that I would really be too interested in. But we take a look at some of these accumulations building in names like Baidu. And we're past the earnings report. We're past everything that needs to be obviously passed by. And we have that 3 lower low look, and we don't really see the subsequent expansion out of the range that obviously makes a lot of sense, right? And now we're just getting these higher lows, and we're getting a ton of consolidation built off of obviously where we would find potentially expansion here all the way back up into the 110, 114, just those general areas, right? So a lot of targets in mind and a lot of opportunity that I see elsewhere if the markets want to get really bad here. As far as our market goes, right? There's still opportunities everywhere in financial markets. If they want to continuously rotate into other like maybe safe haven names, gold has been on a fantastic run. And obviously this looks like it wants to obviously develop like maybe like some really nice high tight consolidation for a continuation, but SLV has not really followed this one just yet. Um, so, these are very gappy charts. I would always suggest that you buy a lot of time on names that look like this. We obviously just pivoted off of what would be our 50 SMA down here at these February lows. So, there's always going to be opportunity in names that look like this, and I could potentially think about taking a swing trade if we were to claim like around 30, and I'd obviously start looking for like low 30s, like about 2 deltas on the contracts, and I'd buy a lot of time here or just potentially just shares. But China would have a little bit more of my interest moving forward, as well as XLE and maybe precious metals that are lagging off a little bit. So that would be kind of like my safe haven rotation look. I don't think it's going to happen, and I think we're just going to get really nice opportunities over here in the tech market, right? As far as NVIDIA goes, guys, chart don't really look too good. Does it matter? Not necessarily, because I don't see any super obvious downside target for this distribution. We've already retested all of the levels. Obviously, we have a major target in mind that seems like a little bit of a stretch down here into around 747 would be technically the last target that I have in mind, or at least the top of the gap up here at 74.22. This thing could technically pull all the way down to 74, right? So we don't always want to think that that could never happen. Markets could stay extremely irrational here. Do I think it happens anytime soon? No. But at the same time, we're just simply looking at reversion here back to the upside. So, these targets can definitely still be a factor here in a major, obvious type of target in mind here if this thing starts to look really bad on the reversion here back to the upside. So that would be everything that I'm looking at in terms of tech. Now, if the distribution wants to continue, First off, I would be looking at names that are like Palantir, right? Palantir and Netflix are in similar distribution schematics. Obviously, we have the fill of the peg. We had major ATR extensions above that peg whenever we got the continuations with no true high or low within the gap. This is why I said this is a 2025 distribution, especially after seeing shit that looks like this and gap and go continuations that are just continuous short squeezes. Those are not healthy trends higher here, back to the upside. So what I'd be looking for is obviously the climactic top, followed by obviously like a stage 2 type of like base here as far as distribution. And then obviously that's your climactic top here from the upside, and you start getting the redistribution phases happening throughout this leg down, throughout the retracement into equilibrium, and that would be a fantastic short side trade. Very, very similar look as we go over into Netflix, right? So this is all your kind of like your sell climax or your buy climax and your preliminary supply. And then obviously that led to like a crazy short squeeze after the peg was developed, and then they completely capitulated it throughout the rest of that time that we had, right? We go over to Netflix and we can take a look and see how we had our preliminary supply, kind of like our buy climax, our peg, distributive looking peg here that they sold off immediately off open, and then it just started to consolidate within that earnings bar. Once it obviously gave through the earnings bar, we never had a strong high or low into that peg, and it just kind of continuously was pushing its way higher before it found the climactic top, lower highs beneath the earnings candle high, and then it just capitulated right through the lows, right? So I'd be looking for a redistribution schematic to build out on Netflix as well if this thing were to start looking like it was going to build out like a much, much bigger perspective of distribution going on. And that's just down the road because we don't know what's going to happen with the broader market perspective, but that would be my next vehicle here for the downside. Especially if they showed a really weak leg on the reversion here back to the upside. And it covered a lot of this candle, right? And then developed just a really nice redistribution, right? So we don't necessarily know what's going to happen over there. We're getting absurd amounts of volume on forward down here. And this is potentially in the midst of like a wedge pop, right? Or just like your climactic low. This has been in a huge retracement from the 2020 to the 2022 run up, right? And this is the biggest weekly volume that we've actually ever seen within forward from the climactic top that occurred over here in 2022. So that's very notable to me. Very notable to me. I feel like there could be obviously further news with this one. All the gaps are filled as far as bear gaps go. We have major gap fills to the upside, dude. Huge. I mean, these are huge. All right, this is why I said this was on my list, right? And then we had a big support. What they did was they just started stacking volume. We had a displacement failure on this candle right here whenever things started to obviously base beneath on this gap down, try to defend the gap. And they ripped it back to the upside with 157 million volume, and then consistently traded that volume throughout most of this gap. And now we're actually claiming back above that gap and holding that gap now as obviously progress from buys, right? So I don't know, man. This is just a really clear, crazy chart to me. And these are names that could perform well with tech selling, essentially, right? These don't need tech to continuously do well, right? We go over to GM. Ford, you need a ton of time, guys. Please keep in mind. Please, for the love of God, keep in mind. So we have another chart in mind over here within Target. Huge, crazy bull gap that's now just finally filling. We go into the hourly chart, and this can continuously put in that wedge look and a lower low accumulation that's kind of building here. with maybe a climactic low down towards like 111, and then that would be like a spring followed by a pop back above into this hourly support, higher lows on top, and then obviously continuation back all the way towards the gap fill, all the way up here, right? So, I mean, this could be a fantastic trade, and that's why I'm getting a little bit risky with it, but I'm only half sized. I can add another whole entire half and maybe even a little bit more. And then hopefully I can get this all the way up to 120.76 by April. Because if that happens, I'm very, very paid. If it doesn't happen, I take a loss on a half-size trade, and it's not the biggest deal in the world. But yeah, I'm looking for obviously a lot of things to take place in terms of a lot of these different names in the equity market. Disney's falling off a cliff, and this is going to be a 5-star reversion trade here back to the upside if this thing wants to continuously do this. Just we talk about a parabolic short, we talk about a parabolic long. Guys, this thing is completely capitulating away from the mean, essentially, right? So a lot of these names have extremely, extremely, extremely clean reversion opportunity. It's just the market needs to remain decent, right? Sorry, I had to take a sip of water. Let me throw this in and talk a little bit more about banks. We're going to go over banks. Do you guys have any questions about like anything I've viewed within the last 2 months? Any interest in China? I just talked about it. PGJ Weekly. PGJ. Yeah, this is a fantastic looking chart over here. Like this is another really nice example here, guys, that Verb just mentioned, and this is a like a 32 break the creek as far as Wyckoff goes. It's kind of already had like its wedge pop over here. Now it's pulling probably into its EMAs and undercutting those here on the weekly, and now it's getting nice and high and tight off the resistance. This is just a fantastic looking chart with record high volume here, at least ever since 2022 of March happening here on PGJ. So this is just really, really, really. These are really good looking charts. The level of liquidity on a name like this does not interest me, just because you could see how inconsistent the volume profile is throughout this area, guys. But like for a shares trade, I wouldn't mind it, right? And obviously this is a very large ATR. It seems like it could really start to move whenever it wants to move. I mean, here's a plus 10% day. There's a plus. What did it gap up right over here? 11 per. Yeah. So I mean, whenever this thing wants to move, it wants to move, right? So that could be a decent looking little shares trade over there. And as far as if the market wants to transition a little bit more risk on, Unity doesn't really look too good just yet. And I don't think the market's going to immediately transition risk on. I think that's going to be more of a summer thing, guys, whenever QE is actually happening, because a lot of these names are pulling back. Well, I think they're a little bit more concerned about tech, and a lot of this OPEX window and the previous OPEX expiration is driven through tech, and then these names just don't do well whenever tech sells. So this is more tech driven, essentially, is what I'm trying to say. So I think they're going to worry about tech before they worry about a lot of these other names. And then MU, yeah, fantastic. I was just about to bring that up. Thank you for mentioning that. Really, really, really coiled chart over here on MU, guys. And there's one thing that really, really, really catches my attention if we want to develop the reaccumulation and the change of hands into the FOMC, which would be next week, which would probably pull this thing down into 8150, which is this gap fill. And that's also a very, very large spring happening here from all of this liquidity, all of these stops that would obviously be rated beneath 8412, right? And that would obviously be a disgusting looking trade on a spring, a reclaim higher lows. I'd go out to June expiration, maybe the very end of summer, and this would be a trade from potentially 85 all the way to 110, right? So I'd be catching essentially a 29% move on options. All right, that could be 1,000% swing trade on a spring that looks like that. If I take the right amount of time, I'd probably just go leaps to be safe. Like I did leaps on McDonald's, these ran crazy right over here whenever I was looking at like these rotations going on. So let's actually just go over into the sectors and we'll go sector by sector. We'll talk about everything that I'm seeing and kind of how these things might want to pull back just a little bit more. And that's why I'm preparing for all possibilities because banks don't really look good. A lot of these names don't really look too good. They don't, right? But could this reverse and could this close the gap and close above the previous week's close and develop a weekly hammer that looks like a higher low? Yeah, it could, right? Or could this further distribute and could this pull down into the entirety of this gap over here that has a lot of volume behind it? And then maybe we could start looking like we're reverting here back to the mean for the upside and filling a lot of these gaps that we're just completely capitulating through levels on. We don't necessarily know, guys, right? This is all about balance. This is all about charts making sense in terms of like what the candles look like and how those align with how like CPI went and with how the windows went in terms of like OPEX. Like I said, flows can return and get stronger and stronger and stronger. Vanna and Charm are a little bit suppressed beneath the 20-day, right? So we always want to obviously look for momentum back to the upside, and those flows can get gradually stronger into the March OPEX expiration. And FOMC can catalyze the entirety of the thing, which could bring us into a schematic that looks something. If we go on the daily chart or on the weekly chart, could bring us into a schematic that looks something like this, right? Like weekly hammer, pullback, FOMCs and LPS, pulls higher, fakes people out one more time, or they sell it off one more time off of some of these gaps that are left behind on the daily, right? So fill gap, fake LPS, FOMC higher low, pulls higher, claims the election gap, bases, another fake lower high that just is collecting previous sell orders off of these back tests. And then obviously just it would result in a really nice move for a continuation into new highs, right? Now, if that isn't the case, and if this thing wants to pull back a little bit lower, it's likely going to pull into the August 5th territory. It's likely going to pull maybe into like 540 or the 618, which would be a higher low respecting 540. And if you guys can see, this would be your higher low, right off of 550. And you'd likely get volume that's extremely telling off of that area. Like extremely, extremely telling. And then that would result in FOMC probably being one of these higher lows somewhere that sends it back to the upside, right? And the long side trade gets way better when we're down here versus, if we gap up and continue. Because then it's going to be harder to like not get caught in the midst of like a lower high potential and just really taking discounted entries and really laying low here until we get like into FOMC and then see what FOMC candle is. Shop distribution. I mean, yeah, a lot of these have been fantastic looking shorts. This would not be the area to short shop just because we're going to be filling the gap. But if you guys go to the weekly chart and you take a look at this, I mean, technically the line in the sand's right here, man. And we're right off of that. We go over into some of these other crazy accumulations that we're building. And these are either on the brink of complete and total embarrassing failure, or they're going to really recover off of the recent gaps that have been filling. and they're going to show off some really nice, easy looking, strong, clean weekly candles. So, you know, sometimes it's just a complete and total patience game, guys. What are the previous leaders in the new emerging themes doing? Oh, they're doing nothing. There's been some religious bulls on names that look like that were like this. Some of them down here, yeah. Some of them chase the highs though. Thought this thing was going to like 150. I mean, that kind of just goes to show you what the market's doing, guys. Um, so yeah, I mean that's everything going on. As far as if we were to get like some geopolitical potential, like geopolitical type of like catalyzing headline, my eyes would go immediately over into some of these industrial names, right? So um, the industrial names that look potentially good would obviously be the MMM high tight consolidation here in the weekly. If you guys remember, I was ultra bullish MMM all the way down here in the 90s last year. Pretty crazy, or yeah, last year. But your main leading ones would be like LMT, and like these don't really look too good right now, so we don't know. But might take a speculative looking trade over there, but this is all just about tech, guys. It's at the end of the day, it's about tech, right? So nothing else looks good. Tech has the volatility. Why would I ever even think about going long anywhere else? It seems like a lot of the risk-off rotations are now starting to fail a little bit as well. Um, so, there's obviously going to be a very, very, very important time and place here for a lot of these charts to put in areas that look really, really good or just don't look good at all. And if they don't look good at all, the mean reversion trade's still on the table, like I said. This is very extended here to the downside, guys, with, like I said, a crazy amount of orders to be filled up here into the gap fill at 490 in the 490s, or in I should say on the S&P into 576. So, yeah, I mean, if the market capitulates tomorrow, my eyes are immediately going over here for an MU spring. Banks can show hands with distribution. Besides, it's less liquid. Could it work the same way in an accumulation? Not necessarily, because banks, if we go over into like XLF, we could see how they would all kind of correspond with one another. They didn't really correspond with the highs, but they could correspond down here with like Tesla gap fill and trap candle. You're not probably going to see banks green and tech red. It's just kind of like a rare thing to see, but you could see banks red and tech kind of propped, if that makes sense. Because they're preparing to sell things off that, you know, are a little bit less liquid and names where you need a strong market for those things to perform well, right? And that being obviously banks being one of the major key leading indications of that. We already talked about like the less liquid names, like the distributions that were playing out and kind of getting back tests of break of structure areas. TOO, I actually posted this one, and this was kind of front running the distribution on lower highs right around here. If you guys go into the daily chart, that is also a gap fill right there, and it's also a back test of this previous support. So that was a very, very clean looking chart, and that was actually in January 29th. We go over to January 29th, and we're in the midst of not even knowing what's going to happen over here, right? We knew it was distribution, but a lot of people didn't know what was going to happen. A lot of people were bullish all the way up here throughout this breakout, and it just led to the UTAD, right? We go over to XHB. That would be our home builders ETF, another illiquid sector. And this was basically just putting in like a weekly head and shoulders a couple weeks before that. So if that makes sense to you guys, that's a really nice indication. I posted that in real time. None of this is hindsight work, like I've talked about. This is why I've been very confident in the distribution playing out within the market. And yeah. So as far as reversion trades go, back to the upside, Google being one, Tesla being one, and potentially Microsoft on an undercut being one as well. 393 NWOG, all the NWOGs kind of being targets here back to the upside. 175 on Google. Microsoft, Google, Tesla is all it really is. And then we also have a gap target as a risk here on Amazon, and this can put in a really nice looking weekly candle back above this 200 psych area. So all of the weekly highs right now are very important. Weekly highs, weekly highs, weekly highs, everywhere. Weekly highs on Google, previous weekly lows. All those general areas are very, very, very big. Kind of have the previous weekly low and weekly open, the bottom of the NWOG, kind of being in a similar place within QQQ, right? So yeah, that's what I'll be looking for. If we do get a gap up, maybe the gap up happens a little bit higher into here. We sweep the gap, get low amounts of sellers off the gap, put in a higher low in terms of like discount, if we could get it, catch the higher low or catch the reclaim off of the higher low, meaning the reclaim of the gap right around here with risk off of the gap or risk off of previous week's lows right around here. Right, and then if you pull fibs, it would be like swing low, swing high. Okay, it might not gap. What percent type of gap would that be? It's not going to gap up that hard. It gaps up into here, and then you would pull fibs from that low to that high, and then maybe start looking for like a higher low somewhere. You could pull the low, or you could pull the actual gap. I'd pull the actual gap, and then start looking for like discounted entries. If it, like, say it gaps into there, well, what kind of gap up would that be? That's not going to happen either. Okay, say it gaps up above the election gap. I would say it would gap up about 1% maybe. So yeah, that would be above the election gap. You'd pull fibs from the gap low, gap high, start looking at discounted entries, or start looking at higher lows anywhere that you can find them. And that would be risk here for a reversion back to the upside on an upside trade. Does that all make sense, guys? Alrighty, sounds good. I'll see you guys in the morning. I'm probably going to be pretty prepared for the morning. I'm probably going to be getting very heavy size tomorrow. Maybe not the heaviest of size if all of my positions work out into tomorrow. But at the same time, guys, the easier trade has been the downside. So now we're in a time where we're getting a little bit more speculative. That's why it's very important to catch these moves that have been happening to the downside on names that have been thrown at you like Schwab. I talked about the GS distribution. I mean, these things fell off a cliff. These are up, 500-600% with still a month of time. We go over to TSM. Fantastic downside target into 167 tap today. Could have rolled profits in lower highs, could have rolled profits in the bottom of this gap, and in any of these areas, even on the new weekly opening range or on any of these pops. So yeah, I'm going to get going now. What I'd be looking for here on Nike real quick would be an LPS off of this gap. So we rejected the break of structure. We rejected the Bill Ackman gap, essentially. We also rejected the footprint candle high right around here, right? So this rejection candle was very clear to not stay in Nike. And now we're basically looking at an LPSY, or an LPS, I'm sorry, off of the golden pocket, which is also like the gap fill, right? So I'll be watching this. I'm going to set alerts on that tomorrow for Nike. And I could go heavy in a swing on this one as well. And I think news is going to hit this one soon. But we do have a report here March 20th, so keep that in mind. And I will be watching that report and seeing what happens with that report and potentially an IV flush off that report. But that's all for now, guys. I'm going to get going. You guys have a good night.